Hello guys, it's Thomas from FINEIGHT and welcome. And today we're gonna have a somewhat educational lesson. So yesterday's trading provided a really nice point on how to trade extended stocks. So if you look at my charts, I have TJX and BJ stock showing, and we can see that they have somewhat similar setup, meaning that after few days of consolidation, both of these stocks were gapping over an area of resistance. So in that case, over there in TJX and over there at BJ. So the TJX was gapping more significantly up. In case of BJ, it was give or take few cents, with the idea that once it broke, it would just fly. And BJ delivered, but TJX not so much. If we look at the 5-minute, you will see exactly what I mean by it. So on the left, TJX, a huge move up and then failure, and later that day the stock tried to take on the high of the day, but eventually failed and closed somewhere in the middle of the opening range. Whereas BJ, huge move up, then some consolidation, and then just straight up boss moving upwards. So, how do you tell when should you hold onto the stock, or just give in and try some other things? And I personally traded TJX. I entered somewhere around here with a plan to go up to like 57 or so, but I had to close it on my stop loss under 54. Whereas the BJ, it surprised me how strong it was, and seeing the daily and the average range of that stock, you would be forgiven to think that at around 32 it was already too extended and wouldn't go much further. But look at it, it did an additional 3 or so points. So let's look at the daily chart of each of those stocks, and you will see that both had some prior resistance above. So in case of BJ, we will see this swing high at around 33, whereas TJX had more resistance, but the closest one was around 55, 20, 30 at the closure of this gap. Then next one was at 58.80, so that's why my original plan to go at least to 57. So how do we tell? And the answer is quite anticlimactic, and it's we can't. So we have to keep an eye on what happens. So in case of TJX, it did 2 tries. It tried twice to break that 55-20 area and then failed. So that's why you have your stop loss. I might have raised my stop loss to closer to my entry ideally, but I didn't because the 54 mark was really holding, so that's why I kept it in case it would change its mind. But that's not the topic of today. You just have to wait and see how it reacts. All right. So then, with the resentment of the 55 area, TJX continues down, and if you then look at the volume down there, you see that there is no continued support, and the interest that this stock had early on disappeared, and that's why this rest of the day looks as it does. Whereas, look at BJ. So again, BJ gapping up, then consolidating for a bit. Your first entry would have been at the break here, but the problem is the 33 mark, and we see that it's the previous all-time high, so that it is naturally a point of concern. So once it touches 33, then look at this high volume red bar, and that would suggest that a breakdown is going to happen, but the market then consolidates and it pushes against the EMA, never closes below it, and then this breakout happens and it just goes. And you can see that the volume starts to pick up the higher the stock goes, so that's a continuation sign, and if you're long, you are in for a ride. So in conclusion, you cannot tell from the daily chart itself. You have to wait and see intraday how the stock behaves at certain areas. Is it making lower lows or not? You can see that, well, with some minor exceptions, BJ never did a lower low throughout the whole day on the 5-minute chart. So those are your signals, and then with the continued support, just look at the volume of that day compared to the other ones. You cannot be surprised that this bar was huge compared to those previously. So that's one of the quick lessons from today, guys, and on how to trade extended stocks. I would, on top of that, suggest you take a smaller size initially, and when the stock proves itself, then you can add on later in the move on your entry patterns. And so you can build up your position, raise your stop loss each time a new swing is formed, and you'll be good to go. So thanks guys, hope you learned something, and I will see you with another recap.